Good morning, good afternoon, and good evening to you all, wherever you are joining me at this hour. Welcome to 131 edition of Investdata Trading Academy Live with Ambrose. You know this is a live market where we are in now, and I will tell you that as we speak, your stop loss and your entering and your exit strategy is key at this moment. The market has remained in a volatile, dimension all this while. But this morning, I will tell you that the the stock market around the world are in green, and it's like a news to you that after we have seen market remaining in a oscillating mode, looking down, but this morning most of the market are in green at this moment, which is a good news to every one of us. In the midst of investors sentiment going up and down due to monetary policy tightened by central banks across the globe and oscillating oil price, that's also causing some energy crisis in some part of the different climate as we speak now. And you know that when oil price continue to go up and the TBM central banks of the world continue also to hike rate, these are the factors that are going to keep market moving up and down. Now, not only that, as rate is being hiked, it has a way of what imparting on companies operating in that domain, and that also will show on the number of this company being posted or will be sent to the market at the end of the day. That is why this oil energy crisis and the central banks rate hike has continued to drive this sentiment and other news that are coming from left and right. But as investors like and traders, I always say that you are trading news, but when you are trading news, you look at what your candlestick to see the sentiment and the pattern and the psychology of people to that news, what they are, because the chart will tell you, the candlestick will tell you what is the sentiment, what is the pattern of people to reacting to that news or information that is on ground. That is why you need to always look at this candlestick and also your chart. That is why I always say that chart is very, very important. You must also understand how to read chart for you to be a successful trader. When you are looking at the market, you need to understand what the chart saying, how the chart communicating to you. And that it is one thing that will also keep you ahead of the market at any given time. As we speak now, oil price have extended the pullback again to trade at 92.78 dollar per barrel as we speak, on a prospect of US and Iran nuclear talk. Because of this, despite there was also a kind of output caused by OPEC, I see that price of food continue to look down. All this, in the midst of what of fear of what of recession risk around the globe. You can see how the market is going. That's why all eyes are on what on coming September, from the middle of September, where different central banks of the world will be meeting to work on their rate, and that is going to influence market. That's why I say this rate or this we're seeing in the market today up, today down is normal because things are driving them up and down. And don't forget that when you are charting also as a trader or investor, you need to look at what is the price saying and price and time. And most people that only chart without looking at time, you only enter a wrong position because you are not analyzing time along with price action. As for analyzing price action, you also analyze time so that at the end of the day, that time will help you. That's why when I say investing with date, people understand what I mean by investing with date. You want to invest with date, with price action, all this will help you to know exactly when to be in the market. You need to know exactly what factors will change the direction of this market, and when it comes, are you already there or you are outside? These are the things will go a long way to guide investor in this kind of market direction across the globe, because every market has timing, has a date. Everything for that. If you know how to chart, to look at your price action, you must know also how to know to use time analysis also to take investment decision. As we speak now, US market, all the indices are there are in green. In Europe, we are seeing that Europe stocks are in green this morning. They've been kind of hurting the previous day loss to open up this morning fine. But I have to tell you that fear is still there because of what nobody know the next thing. But it's good thing that market is opening around the globe what in green. Europe and US market indices are in green, while Asia is in a misdirection. But don't forget that in the last meeting that there's a plan to cap Russia oil, and that alone also is also sending all these moves we're seeing. And don't forget that as the G7 are planning to cap Russia. Russia also is planning to increase the supply to Asia Asia and Middle East. You can see what is happening. That means this is going to continue to oscillate, to push market up and down around the globe. For you as an investor, you should always keep your eyes, because it's expected that equity market will remain in this mixed direction because of what? Because of fear of rate hike, and at the same time, what is happening around the world, around the globe. That means you as an investor, this is time for you to always keep your eyes, because we expect that in the next meeting, it's only a few countries, but I believe that most of them will also hike rate. Whether it will be reduced to either a lower basic point, or some will make it at what they did the previous one. But all these are what will shape the market as we speak. And it comes back to Asia market. Asia market is why in Africa, so Africa is equally missed as we speak. But here now, look at NGS as we speak. NGS is in red, marginal red this morning at this hour. That tells you that this trend will continue. That at this hour yesterday, you can see that NGS was in green, but as we speak, it's in red now. And also, it closed finally yesterday, in slight red, but now down. But today, as we speak, we are seeing that it has opened on a slight red again. Let's see how the market will go, before the end of the day. These are the things that should guide us as traders or investors in the market. Once you understand that this market has to move in this direction, it will go a long way to guide you when we are taking your investment decision. That means you will be one way investor that will always be looking at what, always be looking at the fundamental alone. You must chart the sentiment behind the market. Where is the fund entering? Because that money flow is very, very important to you, because liquidity has a way of influencing equity prices. If a company releases result to the market and there's no liquidity, no matter how good the company result is, it won't go much, in terms of capital appreciation or market. But if there's liquidity and you see company result looking good, you see that that company will have to move, up. But now that we're seeing liquidity coming back right to the market, I believe that investors should also apply caution when you are trading. That's not, keep your eyes on what, on your stop loss, and same time look at the liquidity level and how to position in the market. And that's why today I want to quickly talk on how to manage your manage your losses in the market, especially those that their portfolio is in red. If your portfolio is in red, that is not a death sentence at all, because in the same market that that including now the market that also that will take you up. But what you need, that now that we are already in a bad water, you need to look at what date you enter this position. Until that date, you now look at the date, the price you enter, and look at the price is selling today. If the difference is within your stop loss, get me right. If the difference is within your stop loss, fine, it has gone beyond your stop loss, and you know that there is no action or what you're expecting that will change the trend of that stock. Or if the number they are posting that is not in your own expectation, that means it's going below your expectation. That is why the market is reacting that way. That's why it's going down. In that place, you need to cut your loss quickly and also go out. But if not, you can also look at the stock and see there's something that is coming closer, that you know that if this thing start coming to change the face of the market. That's why I said you must be analyzing price action, you also analyzing not time analysis to know that exactly what is that. If you see that yes, the time there's something coming to put the price up, what you don't need to, you need to look at that exactly the time it will hit the market and look at where you are. Is it far? Okay, can you wait for how that long to go? Because at this time you are looking at your chart to see the price report. For example, if this is just like for example, this is an index now we are using here. You can look at, you enter at this point, and okay, sorry, you enter at this point and it came down here, and you want to look at, here is the price now. Are we expecting any information from this company in terms of their earnings, in terms of economic news that will come, that will be positive, that will turn? Or you know that, every expectation we are seeing that people are not, so they are not expecting with a great expectation. Either they are with pessimism, they are not confident of what they're expecting. But if they are confident that what they're expecting will likely to become positive, you can. But if they are thinking that what is coming will be negative, then you see if whether it's better for you to cut your loss here, or you wait and come there. It's better you say, okay, let me quickly come out here and hold my cash and watch. But if you see that there is kind of a positive expectation that when it comes, markets might react to it and go up, you hope. These are how to work to manage your loss. That is one. And also another thing that you need to look at, that you want to see exactly how much you invested in the stock, because you have seen the price now. I can see that, if the time, okay, if I'm waiting for what is expecting, like how much will I put in this same stock to reduce my cost here, and when the information that is coming come, and it's going to attract a kind of demand for the stock, and the price will go up, can I average down at this point of what I might put in? If not, don't add to what already a losing position. I will tell you that don't add to already what a losing position. Don't just because you have seen the timing of what is coming, and you can see that what is coming, is it what that will change the face of the stock or the market? If it is, no, you start taking position. But if it's not, don't add another cash to that position. That means you are locking down more money in that position. You need to stay away with that and hold your cash to see if when it comes that you can now jump in. But tying down money and what you're expecting, if it is positive, go ahead and buy into the stock. That when it comes and go, you can quickly come out and even on a better purpose because you have averaged down your position. That is how to also trade in this kind of oscillating market. But in all this, the good thing is that you must know how to use your technical analysis effectively, and that is one of what we are going to discuss mainly on the last in the next comment, masterclass. Yes, there's here and there technical analysis. Yes, if you are still applying if you know I've been saying this, if you are still applying technical analysis the way you were taught 100 years ago and the same pattern, and you are not changing with the trend because events are kind of change a lot of things recently now. And that's why I said past performance is not guarantee of future performance of anything. It's also in technical analysis because that is how it worked before. It's not so that technical. You must take what is what the contemporary technical analysis was saying to take in consideration how most fake out, because there are some you call it a breakout. The minute you just enter, it start coming down. That is fake out, but you need to know how to identify a real breakout and also even a real market button and also top it so that you know exactly what to do. Because if you are reading some chart and with indicators the same way it is taught 100 years ago, 50 years ago, 20 years ago, even 5 years ago, you will be in a big mess. You need to understand what is happening. And don't forget, because a pattern also like a pattern is like a prophetic that also repeated that has been come to pass, because everybody that is a pattern and they want to act the same direction in that same that pattern. But I'll tell you that most big funds that they perform like that, they are seeing that this is what everybody will do because it's a pattern that people have taken that way. There's a way to that to yourself to trade and confirm whether at this time is it the right time for me to buy. What am I going to see to confirm that really there is this pattern has given me a move to go? That's why I said you must know how to look at the classic technical analysis before now and contemporary technical analysis, and that is what that's why I said when you say new actionable and technical strategy, how to to catch the reward, the real position in the market, you need to also to understand that. Another thing again is that now that you have seen your position, one thing again you have to do that this you have to what we call protective word, protective stop. Yes, you have seen where you are now, but now you have you are seeing a positive news that is coming. Everybody is expecting something. They are pessimistic that something is coming. Sorry, there's optimism that something is coming that's positive. Then at that point now, you now set like when it go below this, I'm going to sell. At that time, you now say what we call a protective word, stop loss. At that time, you have seen your loss position. That will help you to manage what your loss at that particular time. You can see that these 4 points will help you, and also you can now fit what we call the maximum stop loss or the minimum. You need for like invest data. Our minimum stop loss is what 7, and the maximum is 10. But we would use most of us 7% as a stop loss for any position we are taking. If you go and check our buy and sell signal, so that you can easily, because we're a trader, you can easily protect your fund and come out of that position and move ahead. This is how to trade at this point, because the market is still going to oscillate as we speak. Why I said going to oscillate is that if you look at what we call September effect, September effect comes in different way. Before now, you know that a matured market, they will be going for someone, and when they come, they will buy back what in October, selling down for this one to for well. But back here, in our own market, whether you like it or not, people will say, oh, because children are going to school, won't affect the market. I will tell you, because of what things are changing rapidly, it will affect the market now. Why did I say that? That's why I said that the pattern we saw in September is almost the same to that of the month of August. Why is that? This month of September, you see parents will be paying school fees, and that they will be selling off their position. And don't forget that those that are taking their children abroad, they will be going back and they will sell all the have at the time to make sure that they go back. Don't forget that because of exchange rate has also changed, they are paying more. They need to sell more, and even the flight issue also is another case. Though the cost they are planning to fly, these are the things that we see that they will pressure in the market until we start seeing no position again from the third week of September. And don't forget that the FPC meeting is coming up on September 26th and 27th of September, going by the official no timetable or schedule or agenda for the for the month. That means, between now you see this oscillation, and also we are looking forward to see what we call CPI, which is the Consumer Price Index report from Bureau of Statistics. These are the things that this will also shape the market. That means for me, seeing this market now, you have to be very careful, trade with caution until you see a clear direction, and that will come out from what the last two trading week of this month. But for those that are entering for dividend as a result of as a result of dividend of banks that we are seeing now, fine. But don't forget that today also we expect that the today is the qualification date for for two of the treatment that came either for Zenith Bank and the Stanbic Bank. We expect a markdown to come from this banks, and that if it happens, that will naturally tell you that there also this mistrend we are seeing in the market will continue for a while. For you as an investor or a trader, these are the things that you should be looking at the market, so that as the market oscillates up and down, you are already in a position that you know that yes, I'm taking income at this point, and then I will wait to see when the market starts rebounding. Then when we start seeing people take position for the dividend. Like today, we expect the price of this stock position to qualify. As from tomorrow, the 7th, we also see that there will be price adjustment at this hour again by tomorrow for these companies, especially for Zenith Bank and Stanbic. Before now, look forward to see that of Fidelity and the also in the same month. Also, all eyes are now on the result of UBA and the Access Bank as we speak. These are the things we expect. And also, I told you yesterday that PZ that we expect to read result also have kind of filed for delay. These are the things that will keep the market in this oscillation. But I believe that you as a trader investor, at this time, you can take what we call a position taking or position trading, because you are expecting something, but seeing the price that's coming down, and now that we're seeing the market making a kind of lower highs, but still we're seeing a kind of side trend movement now for yesterday and what is happening this hour. You need to also apply caution, but let your risk management using your stop loss always guide you to know exactly when to exit a position, and also when to want to take care, when to enter. Once you're able to do this, I think you're able to manage your risk in this market, because I see that there's great potential in the market. Don't forget that I always say that there is what comes with the end of the year, that the last quarter of the year, that seasonality that for that quarter will also play out in that last quarter of the year. And don't forget, I said it earlier, that this year being pre-election year, as from 28th of September, we expect that the campaign will start. And not only that, spending of these political activities is also expected to empower the market, to provide liquidity that has the way of trickling down to the market, who believe that this will go a long way to support the market. And the fear of market going down because of election, I think if it has not been, it have been started before now, but because of the holding structure of the market has maintained this pace. For me, let's keep our finger crossed and focus on those value stock we have, because when there is a rate hike, most growth stocks suffer a lot, but value stocks is where you beat your 10. Like what we're going to discuss in the coming master class, we know that there's some cyclical stock that is good for you to know exactly when to enter and when to exit. And those cyclicals, you know exactly when the period where you're about to see impressive number that will support their earnings. There are some that are defensive, even when there's here and there, those company price will be stable, and also their earnings will support them. You can easily make money into such companies. That is what we expect. And I said earlier, fourth quarter of the year is the most active quarter. Go and check it. It's only a few occasions you see that closing down negative. But last quarter of the year, most and first quarter, these are the quarters that are most active because of any season and also position for the end of the year. Let's see what the market will play out before the end of for today. But speaking of market, is likely what is likely in red. But I believe that market can easily rebound from this position depending on what happens between now and end of the day. As we speak now, want to look at what is happening in the market live. You can see that down to the equity market on the exchange now, looking at the all share index, what is the index action. You can see that the market is slightly in red. Market is doing 49,975.19. As market is down by 16.22 basic points, representing about 0.01% down, 0.1% down. In the red. For me, it is very flat, very small, less work. But what will make you to look at again that you can see that the market breadth, as we speak, is negative. We are seeing 11 losers and against just 7 gainers as we speak. This I tell you that the things are not also too looking good at this hour because we are seeing more selling position. Right, we are seeing 11 losers and 7 gainers. It's also telling you that people are still taking profit as we saw yesterday in the market. Now that trend has also continued at this midday. But as we speak, the stock that led the losers chart is cornerstone insurance followed by name insurance, livestock feeds. You can see FTN Cocoa and mutual benefit. These are the top results. These are, yes, they are small cap stock, but we can see other stocks that are also that has a trend below them as we speak on the chart. But now on the gainer chart, we can see that the Unilever is leading the pack, followed by Champs, Francis Jais Bank, and the Francis Sovereign Trust Insurance, and the Sterling Bank as the top five gainers as we speak. But in terms of volume, like I always tell you, you can see that Sterling Bank being among the gainers is also leading the in terms of volume. And don't forget that in recent days, we have seen volume in that Sterling Bank, and you can see also that the directors in these banks are also increasing their stake. That also send you a signal. And also, when I saw also, when you see, like the MD of Fidelity buying about 5 million units of Fidelity, like that on Friday or this Monday, that notified the exchange, says that before you can see, when you see directors taking position, they are also saying something. They are also increasing their stake in that because they know for the future will be better. Because every investment against the future, that is why they are taking position. That's also give you an insight. Now we are seeing the more activities in this Sterling Bank as we speak. Sterling Bank is leading in volume, followed by Mutual Benefit. You can see UBA, Zenith Bank, and the Access Corp. These are the ones that are on the top volume traded at this hour. And before we go to live chart, we want to look at Access Corp. This is when we're expecting the result. What is happening? What's the pattern? Look at the UBA. Then Zenith Bank will mark down tomorrow. Want to look at what is happening in Zenith Bank. Also look at the chart of Sterling Bank. We'll see Unilever rebounding to come to the gainer start now to lead. We also look at what is happening in Unilever. This is why it's time for me to also look at Jais Bar. But I know in for net insurance is profit taking, and that of also mutual benefit. We saw them. These are profit taking activities in there. But let's look at the chart, the market, really what is happening. Looking at the market here, you can also see like yesterday, we already seen a kind of a sliding or a sideways movement here. But you can call this a sort of markup. But as we speak now, the market is also entering what we call distribution. Ready does not confirm a decline, but this is a distribution phase. I will call it from here to here. We can see this is a markup phase. The market has been keep positive trend here, but now we're seeing a kind of a side movement that also a kind of distribution state of the market before market come down. It can quality of here break out and extend the recovery. But what we're seeing now is a sideways movement that also confirm what we call a distribution phase in technical analysis. Just want to quickly look at this first so that you can see. You can see it here. Yesterday we saw the market was red. You can see it here also as we speak. This market is also trending. But you can see from here to here is an uptrend. If you can equally draw it yourself, you can see it's an uptrend. But now this is like this is higher and this is lower. Where you can see it here. Market is also making kind of a until take away this one, that will not confirm that this market is also on a decline. But as we speak now, this is a distribution fee. That's why I said you must not to read your candle structure to see where the market will go. Other indicators or momentum indicators will confirm where the market is going from here. Let's quickly go back and call up our indicators. As usual, I'll call up the MACD here. Use MACD for today. You call up MACD to look at what is happening. MACD is the momentum indicator. Also look at money flow. Then look at the moving average exponential. As usual, change this one towards to 8. Trading above the T this morning. That's why those that are leading the volatile. But one thing again to look at what is happening here. If you look at here, this already momentum is high here. You can see that it keeps going on. But if you look at this histogram here, it's still like a bit flat here, and that shows a day chart. But I see that there is still relatively strength in the market. So look at what is happening. On the 1 hour chart, money flow is looking up. Why market is also confirming know, a small so that a momentum is coming down. Sorry, momentum is coming down already, having a weaker momentum than the stronger we have seen before. You can see it here after it has kind of stuff like trend here for the hour, or you can see that see the marginal crossing down on the chart. For quick one, let's quickly look at what is happening in UBA. UBA are the ones who are expecting their result or not before 15th. UBA, see what is happening in that bank as we speak. What is the sentiment behind the price movement? I will tell you on a 1 hour chart, the sentiment is not looking good. You can see it's trading below the T line, which MACD has confirmed here. Money flow is down, fund is not entering on the 1 hour time frame. You can see it here. I tell you that every candlestick you are seeing here represents a 1 hour activity. Since your 1 hour, once we move to 1 day, it's also everything for money to be a day. You see that is 1 day chart that we create for week, depending on the time frame we are using. Now let's look at UBA after a day chart. A day chart is still not looking good. You can see that it's already coming down, and the momentum indicators are giving us sign. Even at this point that we're looking forward to see the result, you can see that fund is also looking up while momentum is coming down. This is a missed signal we're seeing here. On a day chart, money is entering the stock, but momentum is coming down, and you can see the candles to the pattern is also on the downside, slightly trading below. Now it has changed again in this market. You can see it here. What that is right below the T line now is flat on the T line. You can see the momentum. You need to understand. When we enter the stock, when I open it, you can see that there was a red one down here. But as I speak now, that means also what the money flow is saying that one is entering the stock. People are taking the position. At the end of the day, you might see that UBA will close there positive. You can see that it's resisting decline here. Now as we speak, trading flat on what on the T line on a day chart. On a 1 hour chart, we have seen that it was not looking good initially. I need to go back to look at 1 hour chart. See that still not looking good on a 1 hour chart as money flow is still looking down seriously. Let's look at the access curve. These are the things we need to know, because these are the ones that all eyes are to speak now as they are yet to release their result. And the result for half year is likely to hit the market. For on a 1 hour chart for access, yes, not looking bad. Also try to resist decline with the candlestick formation we're seeing here. This is already a hammer formation, but this a green position, a bullish, but we're seeing a hammer little here by the side. And if you look at the momentum indicator, it's also up here as a rally here, but we're also seeing that it started coming down gradually, and money flow is looking down on a 1 hour chart for access bank. If you look at the day chart, it's very, very important. On a day chart, yes, you can see that it's in green around around 875. In green, it is good. It closed around 70, 870, now 875. But if you look at your momentum indicators, you can see that a strong momentum indicator is that the MACD is powerful here. You can see it here all the way from here. You can see it here when it turns, it starts coming up here. Gradually, it was coming down, and it was coming down later. It crossed, and when it crosses the C line, you can see the same here, because that is the same thing from here to here to here. That is when it crosses, you can see that it remains bullish. For me, assets is still strong. If an asset, money flow is still looking up for assets. Good one for assets. Zenith Bank, I told you that today is the markdown. Tomorrow, today is the qualification day. Let's quickly look at what is happening in Unilever as we speak at this moment. Look at what is happening in Unilever. Let's see what is happening in Unilever. Unilever Nigeria. Look at what is happening in Unilever. Unilever on a day chart, this morning is in green. You can see here it's now trading above the T line. That before it was below. You can see that they are above the T line now, which is good for the stock. But if you come now, look at the momentum indicators. Yes, we are seeing a sign that trying to cross. Like you can see what the MACD sign is giving us. Once we're able to cross the blue cross the red from up here, it's a good sign. And money flow is also still strong, above 70. For me, for a day chart for Unilever, that is very, very good. That means Unilever, if you are there, if you want to take position, you can still go ahead. On the 1 hour chart, you can see that it has maintained all this while you can see green for every 1 hour. You can see that MACD also is bullish, and money flow is trying to cough up now on the 1 hour chart. Yes, there is potential in the Unilever ahead of what the Q3 number coming from that company. That means you as a trader, investor, There's no need for you to panic in the market now. Just hold your position and see what will be the end of the. But I said play with your stop loss and all this, unless there's something attracting you. I think that even when it comes down and what you are timing is what you're expecting. No, as I say, when you're analyzing the price action, you must analyze time or date to know exactly what will come to put the market direction. I believe that when liquidity start coming, especially when the capital start, funds will flowing from one activity to the other. That also release funds to the economy that has the way of trickling down to the market. As I see it, yes, and also the fear that market will go down at this point will be more. Market is likely to close the year positive, even higher than what we saw in 2021, because the way it's going, market as to speak now, year to date, is still above 17, which is good. And I believe that last quarter of the year has a way of impacting the market. Seeing being pre-election year, liquidity will come. Also, when we start seeing hearing the 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 political manifesto of this presidential candidate and the time assigned to achieve what they are saying. Because I tell Nigeria, this is not the time to say we want to build, we want to give you health care, primary health care. No, we want to see, and also we know the resources available to Nigeria now. Which one in all their manifesto is achievable and how it's going to, we understand, and that will also help, to change this the sentiment in the market and also boost it, especially post election. Rally is also ahead of this market. So I believe that as far the interest rate is not doing if any investment window favor, if investment is being hurt by, the only way you can edge this inflation with this high interest rate is only the equity space. And I have a way of also hitting the manufacturers or the companies, but I believe that companies that are able to pass their cost, that is where you should also be building your ten. And companies that has some cyclical performance, that there's a period that you expect them to do well, there's a period that is supposed to adjust. These are the things we'll be looking between now and end of the year. But I believe that at the master class, we're going to explain this detail and also position right. And also, if already you are in a stock that is position, it gives you more confidence to go that position you are already. That's why I look forward to see you at the master class coming in October 1st. And also, don't forget to log in, to kind of go to our YouTube and subscribe so that you get updates as we release them to the market. That you will be abreast of what is happening in the market. And then feel free to ask your question in any of our social media and also on the WhatsApp group or Telegram group so that we will address immediately. Thank you and enjoy the rest of your trading day. See you tomorrow, hopefully by God. the sentiment in the market and also boost it, especially post election, rally is also ahead of this market. But I believe that as far the interest rate is not being if any investment go people if people is being forced by the only way to affect this inflation, this high interest rate is when they this space. And they I have people also within the manufacturer or the companies, but I believe that companies that are able to pass their cost, that is where it shows to be. But then and companies that have to subcyclical performance that there's a period that we expect them to do well, a period that they do well. These are the things we put now at end